Welcome back to the Deep Dive. After yesterday's big rebound, things took a curious turn. We saw Apple, the tech giant, actually sell off.
Right.
Dips below a crucial trend line, and the SPY slipped back under that $600 support we flagged. But here's the real head-scratcher for me. Silver. Amidst all that selling, it just surged, unexpectedly, on strong volume too. We're going to get into why these moves matter and how they fit into the bigger picture for you, so definitely stick around.
That's exactly right. Today felt like a market recalibration, a classic consolidation after a rally. But yeah, some very telling divergences popped up.
Absolutely. And hey, as we get into this deep dive, if you find these daily summaries helpful, please hit that like button. It really doesn't cost you anything, but it helps us out immensely. And maybe click subscribe so you never miss a beat. You can always unsubscribe later if, it's not for you.
Yeah, definitely appreciate that. And just the usual reminder, folks, everything we talk about here, it's general market commentary, trading education, not specific buy or sell advice.
Okay, got it. So let's unpack this market action then. The major indices, they definitely pulled back today. SPY dropped, 0.85%, slipped below that $600 support we highlighted yesterday.
Right below it. And the DIA fell 0.74%, backing away from its 200-day moving average. That's a key long-term level, so seeing it retreat there, it signals some weakened momentum for sure.
And the QQQ, the tech index, shed 1%, kind of pausing that surge we saw yesterday.
Yeah, and what's particularly insightful, I think, is the IWM, the small caps. They took an even harder hit, down 1.05%, and it landed right smack on its 20-day moving average. Now, that's a level the bulls absolutely have to defend if this is just going to be a pause. This pullback, it really signals some profit-taking, maybe a bit of healthy consolidation. And the VIX, the fear index, it ticked up just a little bit, suggests there's still some caution lingering, maybe related to those Middle East tensions we've been talking about.
Right. So how did this play out in specific stocks? You mentioned Apple earlier.
Yeah, Apple sold off. Closed below that daily trend line we've been tracking. Technically, that could be seen as a bearish signal. But on the flip side, look at Deere & Company. DE, it's just continuing its strong uptrend. It's forming what traders call a high base or bull flag pattern, which is often a really powerful pause before another move higher. It's like one strong day away from new all-time highs, so definitely one to watch. And interestingly, consumer staples actually held up better than tech today. A bit of rotation, maybe.
Fascinating contrast there.
Now, today's economic data, that was front and center, wasn't it? Retail sales came in softer than expected.
Yeah, I saw that. Raises some questions about the consumer, right? Especially after the holidays.
Exactly. Can the consumer keep driving growth? And industrial production only showed modest growth. So you've got these mixed signals. It kept markets on edge, kind of amplified that consolidation we saw. And it raises that big question. Is this weakness enough for the Fed to maybe think about rate cuts? Or is the economy just, finding its footing?
Good question. And actually, speaking of questions, if you've got a stock you're watching or a question about the markets, drop it in the comments below. We might just cover it in an upcoming deep dive. Yesterday's University of Michigan Consumer Sentiment Index, that 60.5 reading, it gave a sort of cautiously optimistic backdrop.
It did.
But today's data really suggests the economy is, at a bit of a crossroads.
Agreed. Crossroads is a good word for it.
Now, shifting gears slightly, crypto and metals. Here's where we saw some really interesting divergence today.
Yeah.
Bitcoin slid about 2.1%, pulled back from yesterday's rally. And it's forming what looks like a symmetrical triangle on the chart, those converging trend lines.
Signals a potential big move coming, breakout or breakdown.
Exactly. So eyes on that. But metals.
Metals. Okay, so gold, GLD, it closed flat, just stuck. Right in the apex of that ascending triangle we've been tracking. Remember yesterday's death hook warning, where that early bullish move just fizzled? Well, buyers couldn't push it higher today either.
Stuck indeed. But silver.
SLV totally defied the trend, surged 2.15%, and on strong volume too. It broke higher after consolidating near $33 for a few days. That was a move we noted as possible yesterday.
I did.
And this just builds on that impressive run silver's had from the $30 level we highlighted weeks back. It's a classic example. Really highlights the importance of spotting those high volume breakouts after a consolidation. Textbook setup almost.
Yeah, quite the move.
And days like today, honestly, with the SPY dipping below $600, silver popping like that, it really underscores why having a structured approach, maybe even mentorship, can be such a game changer.
How so?
Well, at Grok Trade, our coaches, they've got over 40 years combined experience. They help you navigate these kinds of setups, like the IWM testing its 20-day or Bitcoin's triangle pattern. The focus is always on essential risk management, tailored strategies, giving you the tools to trade these volatile markets with more confidence. We even support you until you recoup your investment. It's about building consistency.
Makes sense. So wrapping things up for today then, what does this all mean for you listening? It was really a story of consolidation after yesterday's rebound. Major indices pulled back, Bitcoin slid a bit.
SPY down 0.85%, DIA 0.74%, QQQ lost 1%, IWM 1.05%, Bitcoin slid 2.1%.
Right, but that unexpected surge in silver, GLD flat, SLV up 2.15%, that highlighted some selective strength even with a broader caution.
Definitely.
So we want to know, what's your take? What do you make of Apple's trendline break or silver's big breakout? Got a ticker you want us to break down next time? Drop it in the comments. Seriously, we love seeing what you're watching.
And always remember, this is general commentary and education, not specific financial advice.
Exactly. Until next time, maybe think about how these consolidation phases, how they might be setting the stage for the market's next big move.